Mackenzie. On this episode of the Insurtech show, we take a look at customer engagement and the use of data to determine individual insurance requirements. First of all, we sat down with InsureApp's Jochem and Vollmuller to discuss what changes are currently facing the financial services industry and the insurance market.
I think the financial institutions, they get a lot coming towards them from the external environment, from the internal organization itself. If you look at them internally, they're massive organizations, so very hard to come up with new things, implement innovation and things like that. IT legacy, and specifically for the Dutch market, you could also say that they're very busy with consolidation within the market. If you look at the external factors, it's more like regulation from a financial perspective, Basel, solvency, specific for the insurance sector, but also privacy now, which is coming up. So they are extremely busy with other things than the future of their business model.
Well, of course, we have the obvious ones, like the regulatory issues, like GDPR. Of course, we have the Brexit issue. The max on bonuses is a thing in the financial sector. Then we have some internal things like the lack of talent working for financial institutions, their legacy systems, and perhaps the most important, nobody actually wants to buy the product. It's a necessary evil.
We were interested to find out more about consumer engagement within the insurance sector. So we spoke with Covera's Scott Leung and Allianz's Jacques Richier about maintaining customer attention and their commitment to their brands.
Our fundamental thesis at Covera is that there's very rare moments when people decide to buy insurance. It happens when you move, it happens when you acquire a new car, maybe if your premium has jumped significantly on a year-to-year basis. I mean, these are generally rare life events. And as a result, the time that it takes to, or the moments rather, that you'll actually shop for insurance are few and far in between. As a result, it's very difficult to identify and capture these clients, right? The only way to do it is essentially to flood the market with omni-channel marketing, right? So you essentially are on radio, television, as you're doing SEO, you're sponsoring sports teams, etc. All in the hope that at the moment when the customer reaches an inflection point where they need to buy insurance, your brand will be top of mind.
Because of technology, because of new behaviors, we have also to be aware that new needs are arising. Yes. When we talk about, let's say, collaborative economy, what does it mean for us? Okay? When we talk about on-demand, I don't want to buy something for 1 year, I just want to buy it when I use it or I need it.
Insurance is sold out of the mandatory and obligation area, or it is pushed through fear. So you sell to a buyer's fear, which is not the most beautiful way, let's say, to sell a product. The mobile phone is always with you as a consumer. So we want to be in your pocket, in the background, and we just want to be there for you at the moment that you could need an insurance product. And then step forward and give you this more positive message. Obviously, it is still an insurance, so it's a protection for something that could happen. But if you are there at the right moment, with a product that is fully tailored to my situation, either my family situation, my lifestyle, things like that, then it's a very different approach.
So what we aim to do is find alternative moments when we can provide insurance products to the customers. How do you do that? Well, it starts with this central pain point, which is that 80 to 90% of customers don't bother to shop around when their insurance products expire. So you have that rare life moment, you buy that car, you buy an insurance policy, you go through the pain of filling in all those applications, and then you get a policy that protects you for 1 year, and at the conclusion of that term, it automatically renews. And on average, people are spending 6-7 years automatically renewing their policies. Well, Covera is a way of breaking you out of that cycle. You sign up once, and every year when your policies come to term, we'll actually bring your information back to the market and identify whether or not there's opportunities for you to save a bit of money or get better coverage. So it's not true that if you sign up to Covera, your premium is going to just asymptotically approach zero year after year. But what we will give you is the peace of mind of knowing that somebody actually checked on your behalf. You know, if you can save money or get better coverage, we do all of the administrative work to move you over. But if you're already with the best possible provider, we let you know and we tell you to stay where you are.
The moment when you actually buy an insurance product, which is mostly a mandatory moment that you need an insurance to go on the road with your car or to buy your house. And it's already usually already a bit of a painful moment because it's very administrative, it is complex, it's expensive. And the other moment of engagement is when you actually file a claim. So if you look at the current engagement around an insurance product, it's not really happy, it's not really the way the new generation of consumers want to engage with a product, or at least get used to engage with a product. If you look at the companies like the big GAFA players, Google, Amazon, Facebook, and Apple. And what we try to do is, based on a customer profile that we automatically generate, engage with the user on a natural moment when they actually need an insurance product. For instance, when they go abroad for travel, or an insurance product that adapts to their personal circumstances.
Next up, we talk to InsureApp and Allianz about PSD2 and how it helps them target specific customers.
Obviously, you guys link in with various other apps and various other bits of information. What sort of implications does PSD2 and open banking have for you and for the financial services industry as a whole?
So one of the things that we do is we tap into the sensor data that comes from the smartphone. PSD2 obviously gives a whole other angle of a new data source that we can tap into and that we are currently experimenting with our own algorithms to see how we can further complete the user profile with all the data that is in the banking transactions. And obviously we can also see, to come back to the example of when you visit the McDonald's, we can cross-reference if you have actually been there, but we can also see now if you were just visiting there, or if you bought a full menu, or just a small cup of coffee or a small donut, just to give an example. We can also see things like expenditure. So we could see things like income and things like which type of supermarkets do you use? Is it the budget ones? Is it the premium ones? And it tells us a lot of information, additional information about a user profile. And all with the goal to engage with a user at the right moment.
Excellent. So from your perspective, it gives you a lot more information, which combined with the GPS data and the like that you have, gives a much clearer picture?
Correct, yeah. So we could see in a very early stage, if you have children, for instance, or if you're about to have children, if you start to visit different child stores and you're starting to buy stuff there, not just once, then it could be a present as well to a relative or something. But if you buy a lot the months before, and then all of a sudden we see that you go to daycare in the other patterns, well, then for us it's very clear that you became a parent, and then we can engage based on that data.
If you talk about other industries like motor industry in motor insurance, we also have to recognize that the frontiers between two industries are closer than they used to be. For instance, if you talk about driverless cars tomorrow, what is the impact for us? Yes. So for us, it's really to understand how the world is changing and how we keep the pace to be part of that world.
Next, we take a look at what client data is actually required by the insurance companies and how this factors into everyday lives. Using this data, we've found that insurance companies can provide the best possible packages for their consumers.
As a pure distributor, there's certainly value that can be created by pulling in third-party data sources, but the most compelling use case for third-party data lies in how you underwrite a customer. Right? So what are the ways that you can perhaps rethink the risk-worthiness of a given customer based on information that existing models don't typically take into consideration. So the traditional method of evaluating someone's credit based on their FICO score is brought into question by some startups in the United States that are looking at things like your grades and what school you went to and so on. That's a unique and different underwriting model, and that's where data plays the most sort of interesting role. So for us, for Covera, For data at this current stage of our life cycle is about, purely about, understanding what sources of data can we use to make better user experience and create value for customers. Okay, that's the core. Later, I see a vision for us in the future where we start to be able to provide our own products. At those moments, having a deep understanding of a customer in ways that I suppose conventional underwriting models don't necessarily incorporate can be a huge competitive advantage.
So we have three propositions in the market. One is really aimed at the car industry, whether it is car insurance, leasing, rental, things like that. And that's where we combine driving style, really from a telematics perspective, and we combine it with the context of the actual trip. So we learn the purpose of a trip, if it is a commute to work, if it is bringing your kid to school, and we all take that into account in the, so-called actuarial model, so the pricing of the product. The second proposition is aimed at embedded insurance. So that's where we would deliver this travel insurance embedded in an existing app of either a telco, a retail, or a financial institution. And the third proposition is aimed at health and well-being. And that's because we not only look at the physical activity of a person, so the number of steps you do, if you sit down all day or if you move around, but we also look again at the context. So if you work 90 hours per week, but you move and sport a lot, it can still be an unhealthy balance overall. So we combine social activity with physical activity and the context of work-life balance.
On the driving side of things, how are you able to tell the difference between if someone's on a train or on a car, for example?
So you look at the GPS location, which could be a train track or a highway, and you look at speed and type of movement. So the train will go a particular speed, it will accelerate in a particular way, break down in a particular way, stop at certain places. So that's all context around your movement.
If you're a passenger as opposed to driving?
So that's what I wanted to add actually, because that's a very important part of the technology that we use. We can distinguish the fact that if you're the driver or the passenger, if you are in the car, which is very important if you want to coach someone for safer driving, obviously. And that's because we look at driving style on the one hand, so everybody has a very unique pattern in the type of accelerating, braking and steering. But we also look at context. So where are you going? Why are you going there? Is it to your work or is it back home? And the combination of that can tell us if you are the driver or the passenger.
And similarly on the health side of things, are you able to pinpoint, for example, if somebody is at a healthy restaurant chain or perhaps say a fast food outlet?
Absolutely, but again combined with the context of all of that, because we couldn't tell if you had a hamburger or a salad in a McDonald's. But if we see that you go on a daily or weekly basis to the McDonald's, it tells us something about your lifestyle. And that's all what we take into account.
With that in mind, we look at the implications of having access to such personal data and why it's even necessary.
In terms of implications for the financial institutions, one of the topics that is always around is obviously data and privacy around these propositions. And I'm actually very happy that from a European perspective, they now apply this GDPR legislation, which helps us a lot in having proper guidelines in what to do, how to inform the customer, which data we use, with which goals, which is very different than how currently big players, the big tech players, deal with data. As a consumer, you have actually no clue what happens with your data in the background. Sometimes you do a simple search and you give a lot of information to the party on the other side, but you actually don't know about that. And in our case, we use the data, and every time we use your data and we process your data, we inform you what we do, with which goal, and how you comply with those rules and regulations.
For an individual customer, what I can say is that we will always collect enough information to quote them accurately in the market. Then from there, we have built a proprietary database which monitors and collects what's available to them in the market. And our vision is that eventually we'll be able to provide peer validation to customers as they work through the insurance buying process. So traditionally, insurance products have always been sort of boiled down to bronze, silver, and gold, right? You go through this process, you see it, you're not really sure which one is the best, you choose the middle one, right? It's not a very compelling purchasing experience. I think that something that is much more compelling is the idea of providing on a either question by question or coverage by coverage basis, tell me what specifically I need, right? What does somebody in my demographic situation with my value of an automobile typically buy? Because that's what I would like. I don't want $1 more and I don't really want $1 less. So the only way that you can start to build those insights is if you are collecting exactly the kind of data you asked me about. So data about the customer and then subsequently data about the kind of policies and products that customers are choosing.
Each individual wants to be a specific individual, okay? So they want to be recognized as different, and data will help us. They want to have the best price because they consider that they are different. You and me are not the best driver, but we consider we are a very good driver, okay? And we want the best price. So it's a flawless process. It's about a good experience, but also it's recognition of what I am as an individual and as a client.
Thanks for watching, and be sure to join us on the next episode of the Insurtech Show.